Miro, thanks for being here today. Can you give us the takeaway from the July jobs report?
Well, today's jobs report was a little bit of a disappointment over the expectation. About 150,000 jobs. Expected were about 190,000 jobs. So it was a little bit below, but the unemployment rate ticked down to about 3.9%, which is great. Some of the ramifications is that of this jobs report, it follows a really positive trend of jobs through the first half of the year. In fact, the May and June jobs report was revised upward by over 15%. 40,000 jobs of that 157,000 were manufacturing jobs. And that's great news for those in different parts of the country, but that does not start to factor the impact of the trade tariffs, which we might see in the jobs report in the fall, beginning in September and October. A lot of the wage growth that's anticipated was a little bit muted. We had about a 2.7% increase in real wages, which is still just a little bit above inflation, which is good because over the past 5 years, a lot of times it was actually below the inflation rate. So workers are making a little bit more money.
So HomeAway is the world's leading vacation rental marketplace.
Let's talk for a moment about short-term rentals, and San Diego is moving forward with some rules. Do you think that the sharing market can actually be reined in?
Certainly the City Council does. The City Council passed a fairly tough short-term rental regulation on a 6-2 vote that basically limits the short-term rentals to a homeowner's primary residence only. A couple of hurdles. The first one is the California Coastal Commission has to approve this as well. And the bias of the Coastal Commission has always been to short-term rentals because they want to offset that the higher cost of hotels. Mm-hmm. So we'll see what that happens. And the regulation, if the Coastal Commission passes it, takes effect next July. And during this time frame, the lobbies against the city, most notably the Airbnbs and the HomeAways, they're going to file legal action saying this is not legal. And so there's a lot to stay tuned on over the next 12 months.
And Apple became the first company to reach a $1 trillion market cap. For those of us who don't work on Wall Street, what does that mean?
That's a milestone for any company anywhere in the world. $1 trillion is a lot of money. And to put it into perspective, $1 trillion of market value is more than the value of companies like Procter & Gamble, ExxonMobil, and AT&T combined. It's more value than the total gross domestic product of a country like Portugal. And if you want to look at it from our own perspective, it is worth 5% of the national GDP. So it's a big milestone. But what's fascinating about Apple is that $1 trillion valuation results in a 50,000% increase in the stock from when it first went public. But all that value happened between 2007 and today. So all those other 23 years, not so much. But the iPhone, the iPad, and all these innovations Apple has had has created an insane amount of wealth for shareholders. And to add a little extra in that regard, Apple in the last couple of years, and especially with the current tax bill, has been buying back shares, so that's even elevated the shares even more. So that's how they're deploying their tax savings, is buying back more shares and rewarding their shareholders.
Very interesting stuff. We're learning a lot. Thank you so much, Miro Copic, SDSU Lecturer of Marketing.
You're welcome.